Hey guys, what's going on? It's Riley here with Canadian Dividend Investing, and welcome to one of my kind of full portfolio updates. So we're going to go through my full portfolio, including my TFSA, FHSA, non-registered account, and cash accounts, just so you guys can see a full breakdown of what I've invested in and what my plans are to do in the future. So as you can see from the top here, we're also going to finish off the video and do some buys in my non-registered account as well. So the total portfolio is up to $110,954.24. We are up $6,678 or 6.4% all time. Now, just to preface this as well, I'm not doing this to brag whatsoever. I'm just doing this so others can learn from either what I'm doing or my mistakes, so you can be a better investor overall in the future. And if you have any questions, concerns, comments, leave them down below. So I'm going to scroll down here and then we'll jump right into it. So starting with the cash account. So Wealthsimple has an awesome platform. Because I have more than $100,000 deposited into my Wealthsimple trade account, I do get 5% cash on anything invested. So every month they pay you out. So I believe interest from last month, which was December, was about $51.70. So that's with about having $15,000 in just the cash account. So again, this is just to kind of mitigate against anything in the stock market, just to put a little bit of money aside in the cash account. Again, it's going to grow at an even 5% moving forward. So there's no fluctuations involved with that. So just for peace of mind, that's why I have that. Again, it pays out every month at about 5%. So next we have our TFSA. So if any of the OGs remember my Max at the TFSA series. So all time with the TFSA, we're up $5,882 or 8.24%. In the past year, we are up $5,300. Past 3 months, $1,800. Past month, $2,600, which is pretty good the past month. This is getting a little bit skewed. Obviously, we're not up 186,000%, and in the past day, slightly down $200. So I'm going to scroll down and we'll go over all the holdings that I have. First off, being Algonquin Power Corp. Again, I kind of just keep this here. It's kind of a funny story. I kind of just keep this here as a notion to not get emotions involved or listen to other people without doing your own due diligence. I invested in this basically at the bottom. We were down 56%. I probably won't end up selling this for the loss. I'll just kind of keep it just as a notion in my portfolio that don't be an idiot. Bell Canada, again, this stock's down as well, about 11%. Again, with all these individual stocks, I think in my TFSA, what I'm going to do is once they get to a positive amount, I'm probably going to sell them off and then convert that money into my main ETFs that I've been investing in. So CNR, Canadian National Railways, we're up 4.6%. Enbridge, we are down 6%. Fortis, again, just energy companies. Again, when I started my investing journey, I was investing more into individual companies, but just with the amount that I'm investing in, a lot of amateur investors are investing in as well, it's good to clump those amounts into an ETF or an index fund to broader your diversification. So just kind of a quick hint there. Manulife, we're up 11% or $148. I think this is Power Corporation of Canada. We are up 1%. So QQSC, this is one of the main ETFs that I hold in this portfolio. I think it covers about 15% of the portfolio. We're actually up 21%, so it's actually kind of saving my tax-free savings account. This follows NASDAQ 100 index, so the top 100. It's more tech related companies in the States. So definitely recommend that one if you're ever interested in diversifying in the US market. Royal Bank of Canada, TELUS, TD, Tesla. These are all just different plays that I kind of started to invest in a while ago. Tesla, that was again another kind of Algonquin Power Corp. I was talking to someone and they were like, oh, get in on Tesla. It's going to the moon. But I just kind of keep this here just as a reminder to not let emotions get involved. Again, I'm playing this stock investing game for the long run. I'm not trying to have those short wins and make a ton of money in very near future. It's more of a long play. So scrolling down here, one of my main ETFs, VDY, this holds a lot of Canadian companies. It's kind of a high dividend yield ETF. We're down 1.38% or $300, but that's negligent. We're making, I forget exactly how much it is, but about $100, probably if not more, just a month within dividends with owning those companies. So as you guys know, big fan of VFV, have 30K. And we're up 11.65% into this portfolio, which is my TFSA. And then last one, VRE, it's a REIT. I'll be selling it off once it goes back up to a positive value. So that's the tax-free savings account for you guys. We're going to jump back and go over the FHSA. So if you guys followed my FHSA journey, you know that I'm solely investing in the FHSA for the kind of foreseeable future. So I plan on potentially purchasing a property within the next 2-3 years. So I just wanted to keep it nice and simple. I just invested into cash ETF. So cash ETF, it basically has, again, 5% yield, but this is tax free. Because with the FHSA, what happens is you have $8,000 a year up to $40,000. And if you haven't already, a quick reminder, if you haven't, even if you're not investing into your FHSA account, if you haven't opened it already, open it up, because you'll lose that contribution room if you open it up after January 1st. So again, going back to this, yeah, yield 5%, again, is tax-free, as well as the fact that once you deposit those $8,000 into your first home savings account, it is actually deductible for your overall income when it comes to tax season. So again, I'm probably going to continue to invest into cash ETF, especially when that when January 1st hits and we can have another $8,000 of contribution room. So non-registered account, as you guys know and have potentially been following my non-registered account series, we're solely investing into VFV. We're up $275 or 3.47%. Right now, for the time being, I'm going to continue investing in VFV. Let me know what your guys' thoughts are on that. If you think I should switch anything up. I know it kind of gets a little bit tedious and boring, just me buying kind of the same company over and over again. But again, like I've said in the past too, sometimes boring is the best strategy moving forward. So we'll go back to this, and I'm actually going to invest in a couple more shares of VFV, but I'm going to scroll down and show you the crypto account, which I showed a couple weeks ago. We're actually up to $1,000, and here's my holdings here. I just have kind of half of the allocation towards Bitcoin and half to Ethereum. I'm also staking my Ethereum at a 2.9% APR. So yeah, I don't think I'm going to get involved into Bitcoin. Like I was mentioning before, just with risk mitigation, I'm in this for the long run. I'm able to make a decent amount of contributions on a weekly basis, so I don't think there's any short windfall of me investing in crypto for high amounts of gain, because I'm not sure if that's where it's going. Again, very risky, but more risk, more reward. But for now, I'm just kind of keeping things easy, but I'll keep you guys updated with anything that changes. So before I do want to go over the Blossom account, so we can go over the total dividends. As you've seen my portfolio, you can see how much I've been accruing with dividends. But before we do that, I'm just going to buy into another 10 shares of VFV. We'll probably get away with 9 or 10 here. No, not quite. So 9 or 8 here. Perfect. So another 9 shares of VFV in our non-registered account. Perfect. So what we're going to do is go over to the Blossom account, so you guys can see how much the dividends have been accruing with this portfolio. So I'll check back with you in 2 seconds. Hey guys, welcome back. If you haven't already, follow me on Blossom and download the Blossom app, link in the description. My username is Canadian Dividend Investing or at Riley. We're going to jump over to the portfolio, and we're going to scroll down to the dividend forecast, so you guys can see how much, like I said, the portfolio is accruing with dividends. And this is my total portfolio, so including all the accounts. So annually, we're making about $2,715 in dividends. On a monthly basis, we're making about $226, and on a daily basis, $7.44. If you guys want to see the hourly, every hour I'm making about 31 cents just in dividends, so this doesn't account for growth in this portfolio. But thank you guys so much for watching. Again, I don't do this to brag whatsoever. It's just to kind of show myself how far I've come within the investing portfolio, and hopefully you can kind of take little pieces of what I'm doing and tailor it to your portfolio as well. Again, don't take everything I say and copy me directly. Take everything I say again with a grain of salt, and good luck with your investing journey. So we'll see you guys next week for another non-registered account series update, and we'll go from there. Okay, have a great day guys, and we'll talk to you soon.